Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on in the markets today? Dow's down about 200. NASDAQ's kind of flat, right? Okay, so we're still in this downward drift, right? Okay, so this is the last trading day of September. It's the end of the week, and we made it through the month of September. Now, we talked about how September was probably going to be a down month, and sure enough, we're down about 7%. And I think October is probably going to be a down month also. But here's the thing. Right now, everybody's getting in on the short side of this market. They see it going down. They're going out and they're buying puts. Michael Berry, $1.6 billion in puts. He's betting this market's going to drop a lot farther. I would agree with him, but when everybody gets to one side of the boat, you can have a short squeeze. Now, we got the government shutting down on Sunday, right? And that's what's sending this market lower. But if they come up with a deal to keep the government open, it's possible we get a short squeeze up. So just be cautious of that. Be aware that we could have a temporary short squeeze before we head down lower. I think the month of October will also be a selling month, and we will be and the month of October lower than where we're starting at. Okay, so what do we got? We got Moody's. They're coming out and they're saying they're going to downgrade the debt if the government shuts down. That's going to send the market lower. But Moody's also, they put out a warning on the banks again. It's a systemic risk of the banks all starting to fall over again. We've had four of the biggest bank, failures this year in the history of the U.S. The four largest ones, four of them happened this year. Okay, now that's not good, but we're close to done with bank failures yet. We're still in the midst of this financial crisis. Now, of course, we can't talk about that on the Main Street because that would scare the people. We don't want to scare the people. So let's get over to the real estate side of things. That gets a little scary too. Now, Glenn Kelman, he's the CEO of Redfin, okay? And he's come out and he says the housing market has hit rock bottom. Well, Glenn, I got news for you. You haven't seen anything yet, right? These are the good times. These are the times where you can still go out there and sell your house. People still have jobs. Now, this is kind of funny on the job front, right? All right, so we got the Federal Reserve laying people off, but yet they say the economy's doing well. But yet the Federal Reserve is laying off 300 people. Not 300 people to the Fed, that's nothing, but they haven't laid anybody off since 2010. Now, what was in 2010? We were in the midst of that great financial crisis stuff still going on. The Fed had to lay people off. They were losing too much money. Well, what's happening right now? They have to lay people off. They're losing too much money. So job losses are happening out there. Now, what is it? Amazon. Amazon's going to lay off 250,000 people. Now these people are going to be out of work looking for jobs. These aren't your delivery driver. No, they're not the low paid ones. These are highly paid people. 250,000 of them going to be laid off. Also, Amazon. Okay. So they were going to build this big warehouse, right? In Texas, right? Now, we're in Texas. This was in Sweetwater, Texas. Going to build this big warehouse. So what did the home builders do? Well, they started to build these big expensive homes, $600,000 to $1 million in Sweetwater, Texas. Okay, well, here's the thing. They canceled the warehouse, but all these houses are now built in Sweetwater. There's no jobs there that are going to support $1 million houses. What's going to happen? I'd say those houses are going to be chopped down, probably going to fall about 50% in price. They're not going to get the $1 million. Maybe they get $500,000, just might take. But the jobs are going away, and this is causing stress in the real estate market, right? Now, okay, so we came out with the pending home sales numbers. Now, they plunged by 7% just in 1 month. That's a big plunge, right? Now, these are pending sales. Pending sales just means that these were put into escrow, right? Now, the ones that are in escrow are falling out of escrow at about the rate of 16%. So even though they dropped off, the ones going into escrow, but the ones that made it into escrow are falling selling out. Do you know people are actually walking away from their deposit money just to get out of the deals? They realize they made a mistake. Here, keep our deposit. We don't want the house. That's fascinating to me right now. Now, the Bloomberg economists, they said that we'd be down 1%. We're down 7%, 7% in 1 month. Economists don't know anything. How do I know that? I am one. A lot of people say, Mike, you don't know anything. You don't know what you're talking about. Now, if you believe that, you might want to turn off the channel right now. You might want to change the channel. When I was a kid, we had a clicker on the TV. You could change the channel. You don't have to watch this because we're getting to the scary part of the show. It's Friday. I got to scare you a little bit, right? But okay, so there's some dirty little secrets that nobody really talks about, right? The mainstream media says the economy's doing great. It's not doing great. That's a problem, right? Okay, now here's what they're saying. They're saying inflation's running at 4%. 4%. I don't believe that. Maybe you believe that, but I do not believe that. So I go on Shadow Stats. Shadow Stats tells you that the real rate of inflation is 11%. 11%. Now that's interesting to me. Okay, so here we are. They say it's 4, but it's really 11. That's a dirty little secret they don't want you to know about. Now, if you go back to the Paul Volcker era, for you young people, he was the Fed chairman back in the 70s, right? He had inflation running at 14%, and his job was to get rid of inflation at any cost. He raised the interest rate up to 18%. 18%. Inflation was 14. He raised it up to 18. He was hitting it over the head with a big club, right? Well, okay, now we can't do that today. Now, here's why. Here's why. Okay, when he was the Fed chair, our debt, well, the debt to GDP ratio was 25%. What's our debt to GDP ratio today? 120%. 25% back then in the Volcker era, 120% today. You see, we can't just raise interest rates above the fight inflation. We can't do it. Inflation's running at 11%. If you measured it the way they did back in the Volcker era, but it's a little secret. You can't know that. You can't know what inflation is. You can't handle it. Okay, so you got to think that it's at 4%. It's not at 4%. It's at 11%. What do we got rates raised up to? Let's call it 5%, 5.5%. Really? All right. So you're still running a negative 6% real rate, right? Because you got 5% is what they're paying you on bonds, minus the 11% that inflation is really at. So it's minus 6%. This could be why a lot of people aren't happy. A lot of people aren't happy in our society, but they don't really know why. The reason is when they go to buy things, things are expensive. The reason is that their own government is lying to them. Their own government won't level with them. Their own government won't tell them the truth, okay? But it gets worse. It gets worse. Okay, you see, we cannot raise the interest rates above 11%. We can't do it. We would bankrupt the government. The government's $33 trillion in debt. We cannot raise the rates up to where they need to be to fight inflation. So inflation is going to continue to rise. It's going to continue to run hot. A lot of people don't believe this. Believe me, just look at the price of oil, right? Price of oil over $90 a barrel, going to over $100. Many people predicting $150 for a barrel of oil. What's that going to do to inflation? You're going to see a spike like you've never seen before. We topped out at 9% last time, but inflation comes in waves, right? Comes in waves. We're now coming in to that second wave, Annie. We're going to take out that 9%. Okay, so that's a little secret they don't want you to know. Now, the Fed, they really got a choice here. They really got a choice. Okay, they could raise the rates, but what does that do? Let's say they raise the rates to, well, where they should be, 14%, right? Well, what would happen? What would crush the government? Government would default. Everything would come down. The system would fail. So they have a choice of having the system fail. Okay, they could do that, but they're not going to do that. Come on now. They're not going to do that. They're not going to let the system fail. That's how they make their money. So they're going to keep the system going. So what do they have to do? They have to print money. They have to sacrifice the dollar. They have to make the dollar become worth less and less and less. You see, we're $33 trillion in debt now, but they're going to continue to print, continue to sacrifice the dollar, right? Okay. All right. Now, here's here's where it gets really scary. Now, George Gammon, if you watch his channel, you say this is time to take a stiff drink, because this is where it gets scary, right? Okay, so they're going to sacrifice the dollar, right? Okay, now the government had a choice, right? In my opinion, you see, I never understood why they didn't just finance all the debt, okay? $33 trillion in debt. When rates were at 0%, they could have done it for 30 years at 1%, okay? 30 years at 1%. They could have financed all that debt. But they didn't do that. They didn't do that. No, they took the 2-year adjustable rate. You see, it adjusts every 2 years. And that's where they financed all the debt. Why didn't they go out 30 years at 1%? It's kind of like you with your house, right? You're locked in at 2.8% for 30 years. And that was smart. That was very smart, right? It looks really smart right now. Rates are almost up to 8%. You're never going to move again. You're going to stay put. You're in the home you're going to die in. That's your forever home, right? Because you're locked in. Rates at 8%, you're at 2.8. But back to the government now. The government, they could have financed all of our debt at 1%. But now they got half of the debt, half of that $33 trillion is coming due within the next 2 years, okay? So within the next 2 years, they got to refinance it, and it's up at 5.5%, probably be up at 6% soon. So they really messed up, right? They really messed up. So I couldn't figure it out. I just thought that, well, they must just be stupid, because, me and you, we go out and we get 2.8%. Government had a chance of getting 1% or taking the adjustable rate, and they took the adjustable rate. Now, I just go, man, they must be stupid. But no, Luke Gromen, he's another economist sort of guy. He understands macro a lot better than me. He says, no, that wasn't it. That wasn't it. They weren't stupid. See, I'm happy now. They weren't stupid. They knew what they were doing, right? But the problem was they could not finance the debt for 30 years. And I'm like thinking, why couldn't they do it? That's what the rates were. If they did it, it wouldn't have worked. No one would have bought the debt. There was nobody to buy the debt. You see, what we don't realize is that the bond market is not liquid. I mean, this is the biggest liquidity thing in the world, right? The U.S. bond market's supposed to be liquid. It's not liquid. And this is where it gets really scary. You see, the Fed, they can control the short end of the curve, right? They can control that short end. They can, they're going to come out and raise it from 5.5% to 6% on the 2-year, but they can't control this long year, the 30-year, the 20-year. They don't have control over that. That kind of moves where it moves, right? And right now it's starting to move up. And you got a lot of people in the bond market, people like Ackerman, Bill Ackerman, he's got a huge short position saying the bond market's going to crash because it's no longer liquid. Now, maybe it never was liquid. The government couldn't refinance the debt for 30 years, but maybe it never was liquid, but now it's not liquid. So what you got, you're going to have the 2-year staying here at 5.5. We've had this inverted yield curve where, the 30 years down here at 4, now it's up to 4.5. It's starting to catch up. And when it catches up to the 2 years, that's where really bad stuff starts to happen. The bad stuff starts to happen in the economy. The bad stuff will start to happen to your house. Now, you see what's actually going to happen is this is where it gets real scary. They're not going to be able to stop it when it gets even with the 2-year, 5.5, right? Okay, they're not going to be able to stop it there. It's going to keep going. It's going to keep going up. It's going to hit 7, 8, 9, 10%. And when inflation's running, nobody's going to be buying these, right? Because you're going to get inflation going crazy because they're going to be printing all this money because they don't want to sacrifice the system. They got to sacrifice the dollars. So they're going to be printing money like crazy. Inflation's going to be going like this. The long end of the curve is going to be going like this. It's going to hit 10% on long end. Maybe they can hold that 2-year down here at 5%, but the 30-year is going to hit the going to hit up around 10%. 10%, what's that going to do to mortgage rates? Going to go to 12%. But hey, don't worry. This is what they tell real estate agents to say. They tell real estate agents to say, hey, the higher the rates go, the higher home prices are going to go because nobody's going to sell. Everybody's locked in at 2.8%. So it's okay if your mortgage rates go up to 12, 14%, because then everybody's going to not sell. And that's going to be great for house prices because they're just going to keep going up. Now, it's funny because on the other end of things, they say, well, if they lower rates and rates go down, then home prices are going to spike up. These moon boys, they got it both ways. It's going to go up if rates go down. It's going to go up if rates go up. It's funny to me, right? It's always, you hear these realtors, buy now, refinance later. It's more like buy now, get foreclosed upon later. That's just my take though, right? Maybe your take is those moon boys are right, but we're going to see that long end of the curve start to explode higher. What happens when that happens? Bad stuff. You're going to see the stock market come tanking down. You're going to see the job losses explode. Unemployment rate's going to explode. And I used to think we had a 5-year runway still left for the system, but this system is not going to sustain this. It's going to break down. That runway is getting shorter, maybe 3 years, maybe only 1 year left. That long end, they can't control it. And that's where it gets really scary, right? The bonds are not liquid anymore. This is kind of like my oh crap moment. This is scary. Now, you may not understand this, but if you do understand this, you understand that this is not a good thing. It gets scary up here. So these are little secrets that they're not telling you now. Everybody goes, but Mike, the dollar's strong. Look at the dollar's strong against other currencies, yes, but that's going to change too. Once you see this long end explode higher, it's going to change. Things are starting to change. The dollar is not strong. Go to the grocery store. Go to the gas station. Your dollar is buying less and less, and they're going to devalue that currency. They're going to cut that currency in half. They have to. They don't have, the only other option is to sacrifice the whole system itself, and that's where they make the money. That's where the Fed keeps its power. That's where the political people stay in office. They don't stay in office by saying, hey, we got to cut the government by 50%. We got to cut our salaries by 50%. We got to cut everything by 50%. Entitlement, Social Security, Medicare, everything by 50%. No, they don't do that. They don't stay in power that way. So they're going to print this dollar. They're going to have to devalue it by at least 50% and probably more. Now, I know it's Friday and I got a little carried away, but this is scary stuff, right? And it's, Halloween's just around the corner. Thought I'd give you some scary things to think about over the weekend. If you like this stuff, give me the thumbs up. Why not? If you really like it, punch that subscribe button and be sure to share this with somebody, but don't talk about this with your family and friends. You won't have family and friends very long if you talk about this with them. Look, I'm going to get a lot of hate comments for this. This is just truth. A lot of people don't like the truth. And mainstream media, they're not allowed to talk about this. I don't know how long YouTube will let me talk about this, but so far, if you're watching this, they're still letting me talk about this. So hit that thumbs up. Get out there, everybody. Have a great weekend. I'm Tall Mike. Bye-bye now.